Hello everyone and welcome to the technical video day for today, Wednesday, November 23rd, around 10:50 p.m. New York time. Guys, first of all, happy Thanksgiving for everyone around the world that celebrate the day. It's a very nice holiday for us here in the United States. I mean, it's a family holiday. I enjoy it a lot, that holiday. So again, happy Thanksgiving to everyone around the States or around the world if you celebrate the Thanksgiving holidays. Now, let's start the video with a chart that is making a lot of scare. I mean, these charts that you guys seeing right there, that's the S&P cash chart, the one that have almost everyone, I mean, like a question. I mean, it's unbelievable how many times I have seen for the last 24, 48 hours around the news, Twitter. I mean, I'm not a Twitter guy, but I mean, technically, I do have Twitter. I mean, we have almost 1,300 followers on Twitter, and we don't follow too many people, but we follow most of the followers that we have. The people that we follow, they are clients and friends, and so on. I mean, but we have seen CNBC. I mean, in CNBC, everywhere, I see the people talking about the crash and even mentioning Elliott Wave, which is unbelievable. Well, that's how it goes. But, I mean, there is something that you guys cannot be in denial, and we are not willing to deny either. Neither is the idea that that decline for the towards 70 area on the S&P, it looks very important. Still, it can be a flat. There is no deny about it. So as a trader, all you guys need to do now is wait for that bounce that is labeling right there as an AB, as a 3-4, and see how that bounce happens. That bounce gonna happen, guys, sooner or later. If you guys see that bounce to come out to be corrected, then the world is in risk of a huge economic crisis that we've been talking about it for the last since 2008, that's going to happen. I mean, we really don't want that things to happen, but well, it can happen. So the declines for 1270, it looks important. I mean, it's undeniable. I mean, still the S&P, the mini doesn't look that sharp, but it's undeniable that from here, this decline is very important. We're labeling as a 1-2, but again, still can be a flat. And like everything, I mean, it needs to be seen what's gonna happen. Now, I want to show you guys here on the S&P this level, 1157. Around 1157, 1150. This level is very huge right there. It's the 618 of the recovery in October. And if this index if risk trade have any chance or a recovery, it needs to happen from there. Otherwise, guys, we're going lower, and we gotta be careful. It still can be a flat. Don't get me wrong. Still, it can be the flat. So again, this is what is important. What's gonna happen? It's like everything in Elliott Wave and everything in trading. If this recover, it come out to be correctly, then watch out, it goes lower. Otherwise, if this recovery come out like this, then we are here for another move to the upside. Now, why do we start with that and not with the dollar, the euro, all those pairs that most of you guys follow, including me? Now, the reason is being this S&P is the one that risk trade follow. I mean, technically speaking, if you overlap them, you're going to be able to see how both pairs, the index of the S&P, wherever it goes the dollar in an inverse way, but it goes like that. Now, in the dollar, we have two scenarios. We have the scenario when we can go down into the C wave, or the scenario when we're going higher in a corrected wave, and now we're ending at A wave with a B wave going lower to an equivalent in the euro to around 134. I'm sorry, 138, and then lower to 125.26 area. So technically, the wave for ONS right here can make the case for the 138. Otherwise, if the recovery is powerful and make higher, that's the only way that the euro is going to break around about 142. Now, let's move on to the dollar, to the euro pretty fast right here. I think we've been right, guys. We've been out to the money in every pair this week. I know, unfortunately, we hasn't been able to send trades, but well, guys, I want you guys to realize we are doing an extreme effort to incorporate more trades to the service, but I want you guys to understand it's not that easy. But well, I mean, right here you guys can see we'll be calling the triangle. This is a trust for the triangle. And technically, the triangle is right here. Let me put it correctly. The triangle is right here, and this is the trust for the triangle. We are still expecting another low on the S&P, on the euro, but I want you to understand that low can be minimum. At this stage, is chasing a wave 5 of a trust of the triangle. We don't recommend that to anybody. Now, from there, again, guys, same with the S&P. Everything needs to be correlated here. A and B, no reason yet to change it. If the declines go strong like this one, and sorry, the recovery goes strong, you can make the case that this is going to do this. I'm sorry, and go about 142. It goes weak, you can get a recovery like this, and then the euro, let's say that end around here, is going to recover to 137.66, 139 again before going lower in the wave C, looking for 124. It's as simple as that, and everything also depends of the S&P. If the S&P enter into a nest or enter into a wave 4, then you're going to get a shadow recovery in the dollar, and you're going to get a shadow recovery, a shadow drop in the dollar, and a shadow recovery in the euro, and then from there on and on and on. I mean, we're looking around the market. This pair that is showing the path. This pair is being the only pair around the market that broke the October the 2nd low. This is telling me that it's possible that this market is, I mean, the New Zealand, which is that one, still can be in the case that can be a flat. But most likely New Zealand is showing the path that we are going down. But we are going down in a corrective wave. And we are going down before we're going down. New Zealand, what is showing the path is that what we're ending is a wave A in a compress correction from the May 4 high. And that way, you're going to get what we're ending is the first leg of the W, and then it's going to be A, you see, W, S, and we're going down to complete a biggest degree A, but before we're going down, we should correct to around this area, around 78, 79, before going down. I mean, in the case of the euro, let me show you so one more time you guys can see what we mean. I mean, New Zealand is showing this path in the euro, to be honest with you guys. This is most likely the scenario that the New Zealand is showing, that we're going to correct higher and we're going to go lower to 124.22. That scenario goes with the S&P scenarios against a 2 and a nest or a 4 that no going the S&P about the 1290 area. That's kind of like we like it right now. We do not want to in some degrees change the counts yet. I mean, it's too early. We need to see the recovery, but I want you guys to be prepared for. Now, in the 1 hour scenario, I want to show you a pair that is showing the path that recovery is around the corner. And that pair is cable. Look at cable, guys. Look at cable. Look at the divergency. Almost done. We were shooting for 54.85 and the low was 54.92. That's amazing. Now, I want you guys to understand that cable at any moment can go higher, and the recovery, it should take cable minimum to around the 159 area, 158. So, in other words, guys, the biggest recovery, we're gonna say the same things that we've been saying, like when these circumstances comes to the market. We've been bullish the dollar all over, and since Sunday we've been saying that the new high is gonna happen. A new high is gonna happen. We've been saying on the euro a new low is gonna happen. Now tonight we know that the cycle is coming to the end. Now that not necessarily needs to end today, maybe ended already, or maybe it's gonna take the rest of the week off, and the weekend, to end it. But don't get surprised to see a cycle coming in. The wave are calling for a cycle to end and a bounce to happen. At any moment from today until Monday, you should guys see a recovery in the risk trade. And then wave throttle wise, it looks corrective, or the drop from the month of November, it looks corrective, and October the 30th. It is in 3 ways in most of the pairs, and we believe that minimum 3 ways back is going to take place. We cannot guarantee at this moment that the highs that happens on October the 30th in the risk trade is going to be broken, but at least we see a recovery in risk. So with that in mind, guys, that's all you guys need to understand, and hope everyone start taking getting a good positions before this rally it goes and take place. We recommend that also don't peak, wait for 5 clears wave, and then from there you're gonna be able then to, when they're gonna test the low again, you're gonna be able to enter in favor of the risk trade. Okay, guys, so again, it's the same that we covered in the seminar today, nothing new. So hopefully you guys understand. Thank you.